The Indian rupee remains under stress after plunging to a record low on Wednesday, breaching the 92 mark for the first time. While domestic stocks recovered on Thursday, tracking gains in broader markets, the currency was trading near its record low, above 92 against the US dollar on Thursday. That comes after the rupee hit an intraday low of 92.30 in the previous session. Investors have shifted towards safer assets such as the US dollar that has put pressure on emerging market currencies, including the rupee. So far in the current financial year, the Indian currency has depreciated nearly 8%, its steepest fall in 3 years. This makes it the worst performing major currency. Over the past month alone, it has weakened nearly 2%. A major driver behind the rupee's weakness is the surge in crude oil prices. For India, which imports nearly 85% of its oil requirements, higher global crude prices directly increase the import bill as oil becomes more expensive. India needs more dollars to pay for energy imports. This increases demand for the US currency and puts additional pressure on the rupee. Rising crude prices also risk widening the current account deficit and fueling inflation. Currency traders said the Reserve Bank of India intervened to curb excessive volatility. However, economists note that the RBI's actions appear calibrated, aimed at moderating the pace of depreciation rather than reversing the trend. In the near term, the rupee is expected to trade in a tight range of 91 to 93 per dollar. The currency weakness continued on Thursday despite a recovery in Indian stocks after a deep sell-off. The Sensex index rebounded to gain on Thursday after falling over 1,100 points to an 11-month low. The Nifty index also recovered to gain after dropping to 24,480, its lowest closing level in 6 months. In the 3 sessions before Thursday, both benchmarks fell nearly 4%. That sell-off erased investor wealth by roughly $270 billion. The total BSE market value slipped below the $5 trillion mark to $4.85 trillion, while Indian markets performed relatively better than some Asian peers. Analysts caution that rising oil prices and persistent geopolitical tensions remain key risks.